Well, we're back with you to take a look at our ag commodity trade here on a Monday. I'm Marlin Bohling with you, and we have a very special in-house guest. It is Chris Swift of Swift Trading Incorporated. How you doing, Chris?
Doing great, Marlon. How are you this morning?
Good to see you here on a Monday.
Yes, sir.
We're doing
Good to be
fine.
here.
Glad you made it in. All right. Interesting market reaction after the USDA reports came out on Friday.
Yes.
Very bearish, knee-jerk reaction
Seemingly,
after the reports came out. Now, we had a little follow-through in the overnight trade, and I wanted to take a look at current prices and get your thought on what's taking place right now. Okay, let's start with the corn. On the corn market, we are now showing September down 2 at 3.55 3/4. December down a couple of pennies at 3.69 3/4. Now, it is off of its overnight low, close to 4 cents now, so keep that in mind. Now, taking a look at the soybean trade, we currently have the September contract now a penny and a quarter higher. That's interesting. 8.52 was our last trade. Look at the low overnight. It was below 8.40 at 8.39 3/4, and now November is at 8.63. That's up a penny and a quarter from our close on Friday, and now that is almost 12 cents off of its overnight low. It's just a couple of ticks off our high of the day so far. You know, we closed that thing about, 42 cents lower on Friday, and now we're up a penny and a quarter. And the question was, did the market overrun its headlights Friday? Now the question may be getting some answers here. Let's look at the wheat here, Chris. On Chicago, September wheat, we're down 9 1/4 at 537 1/2. That's about a nickel off of its overnight low. In Kansas City wheat, we have September currently trading 12 1/4 lower at 547 1/2. And we have the Minneapolis wheat on the spring wheat trade showing September 15 1/2 lower at 593 1/4. What's going on here? Why is the wheat so weak today?
I'm not real sure. Some of the rain coming in is probably for the new winter wheat seedings that are coming in probably the next 2 weeks. So that probably gave it a little bit of a boost this morning that the rain showers did, to say that we might get a better chance of getting a stand out of the wheat this year.
So what's your take on the USDA numbers that came out? Some analysts are saying that was a really high yield number for corn.
That was a big jump from 174 to 178, and beans from 48 to 51. What it kind of tells you is how much better can it get from here now. Those are big jumps, and historically USDA doesn't go that much from one month to the next, but those are pretty elevated numbers, and especially as dry as we've been in the West, I'm not sure how they compensate for that much better of a grain trade in the East versus that much worse in the West.
I had a couple of analysts tell me last Friday, they said they had to wonder if maybe that wouldn't be the highest number we see all year.
It's
just
very
because
well
of the weather that you were talking about.
Well, and the big yield jump now, again, it'll be really hard to overcome that. And I think at 178, that would be a record yield for corn, and I don't doubt that. However, the actual total number of acres harvested could be down just a little bit.
And from what I understand, the farmer sales have almost completely dried up.
They have. Nobody wants to sell down here, but Mexico was a buyer. We saw Mexico come in here as a buyer this morning, so it's a double-edged sword always.
Yeah, we had 2 sales of corn overnight and 1 sale of soybeans. They were all to Mexico overnight, so keep that in mind too. Okay, we'll come back in just a moment, and we'll talk more with Chris about our livestock trade when we come back. Let's go back to our conversation that we have going on in studio with Chris Swift of Swift Trading Incorporated in Nashville. I want to take a look now at our livestock trade and get Chris's comments. So what we're seeing developing here on a Monday, we have the August live cattle down 63. That's the one in delivery mode right now. I'll remind everybody. We do have October now trading $1.05 weaker. We're at 108.20 per hundredweight. And we have December in there at 112.18 per hundred. That would be down 92 cents. So we're significantly lower here on the live cattle trade to open things up on a Monday. Meanwhile, on the feeder cattle market, here we go with the August down 28 cents, but all the others, Chris, are well over $1 lower. The September down $1.10 at 148.42, and you have October down $1.06. Check that, make it 98 lower now at 148.50 per hundredweight. You know, we're in the neighborhood of about 90 cents, almost $1 off of our earlier highs this morning in the cattle market already. What does that tell you about the support, the fundamental support here underneath the cattle market today? Because we had a cash market that seemed to be kind of disappointing Friday.
Yeah, it's a couple of dollars lower, 110 to 111 on Friday. Weights had increased just a little bit year over year, and I have a feeling we just start seeing more lighter weight animals placed on feed here recently because of the drought areas that we've had. I know that Missouri has gotten a lot of attention because of their lack of rainfall and the forages that they produce, and I think that's having people have to scramble for some feed inventory coming into the fall of the year.
All right, when you look at an October live cattle chart, for example, did we do chart damage on it last week or not?
Well, we really hadn't done much of anything. It's been a big sideways trading range. We've been stuck between $8 and $10 for the last 4 or 5 months now. So I don't really look for a breakout. There's nothing seemingly bullish in the market, and there's really nothing all that much bearish to it. We've worked through the large numbers, and unfortunately, we're just kind of keeping those numbers elevated because of that drought situation.
Now, on the other hand, we have the hogs. And let's take a look at what's going on with the lean hog trade.
A complete about-face.
And the answer is, surprise, here we go. October lean hogs now $2.34 higher at $53.52. December up $2.27 now at $49.75. You know, it got up within about 3 ticks of hitting $50 this morning. Big surge here in the lean hog trade. Did you see that one coming?
Not necessarily, but I think a lot of it's just short covering. The market had been down multiple days in a row and probably just needed a little bit of a breather. We had noted that the spreads between cattle and hogs had really widened out extremely wide.
Right.
And so I think maybe some adjustments in that, maybe more what we're seeing than anything.
So we looked at an October live cattle chart. If you look at the lean hog chart,
it's pretty much straight down.
It was a lot of bottom for a long time.
Yes, yes.
And analysts were telling me that there were a lot of bottom pickers in there over the past 2 weeks or so. Kept getting burned all the time. And if you look at the chart, well, that's a pretty sharp little spike coming off of that now since a few days ago. Is this for real? I mean, what do you think the odds are now?
Well, I'm not real sure if I could place odds on it right now, but I know there's still going to be large production to have to go through, so I'm not very excited about this rally.
All right.
I don't think it's going to be sustained.
So you're going to keep your powder dry?
Yes, absolutely.
All right. Well, thanks for joining us. Appreciate it.
Absolutely.
All right. Chris Swift is with Swift Trading Incorporated, and he is based right here in Nashville.